questions with regards to CFDs specifically. Let's now look at support and resistance points. We are going to get to the actual Alligator indicator as well, so don't worry, ladies and gentlemen. What I want to look at though is different aspects of trading which you can use as part of your actual strategy with the Alligator indicator. So for those traders who do not know what support and resistance points are, support and resistance levels are key concepts that help traders to understand, analyze, and act on chart patterns in the financial market. Support describes the price level where a downtrend tends to pause or loses momentum, and due to demand, the asset starts to increase. And the resistance level is the same, but the exact opposite type of movement. So, for example, we can see we have here an upward trend. You can see we have an upward trend here. Then we had a retracement, and it moved to this level. And it's at this level the price collapsed to this level. So here we've got our resistance, and here we have our support. Now, because this is support level, the price re-entered into a bullish movement, bullish price action to the resistance level again. It collapsed once more. This time we got lower levels of bullish movement, but we still had the same level of support. So we had support here, we had support here as well. Then we had upward motion. We did lose momentum slightly here at the resistance level, but then it broke above it. And then, of course, we've got different resistance levels based on that. So we've got resistance levels here and resistance levels here. And this now has flipped to a support level from a resistance level. So this is something which you can use when you're analyzing the market as part of your overall trading in general. So this is something to bear in mind when we look at later on in the webinar directly at the Alligator strategy. Using fundamentals as well as technical analysis. A trader who purely trades based on technical analysis or trades purely based on fundamental analysis is likely to incur issues with regards to false signals, false indicators, and potentially trade in the wrong direction of the market. We've done a lot of webinars which are specifically based on trading, fundamental analysis, and other webinars specifically based on technical analysis. So, for example, just to look at fundamental and technical basics and the full definition of them. Fundamental analysis is when we as traders are analyzing the economy and the market, and for example, economic statistics like employment figures, looking at the central bank, speeches of the central bank, political events, and so on and so forth, within regards to how that information is likely to affect the markets and prices within the markets or specific assets if you're looking to trade a specific asset. Whereas technical analysis, looking at something completely different. Technical analysis is when we are analyzing the charts, the price movement, price action, trends, retracement, waves, impulse corrective waves, range waves, and so on and so forth. There are two completely different types of analysis. It's important, ladies and gentlemen, to do both. Why is it important to do both? Because you may be looking at a price movement like so, and in this circle here, you may be looking at fundamental analysis, and you may be looking at NFP. Let's say NFP, non-farm payroll, the figure comes out massively positive, and because of that, you are buying. Whereas if you look at the price actually does this. Now, because you're not looking at the price and analyzing the price and the price movement and technical analysis, you're going to be trading in the wrong direction. Why? Because you're trading based on the fact that information was positive, whereas the market and the actual trend reacted negatively to it. Let's look at another example. Here, you may be looking at an upward trend because we're getting higher highs and higher lows. We've got a breakout. Again, at this circle, based on your technical analysis, you may be looking to trade in an upward direction. Now, based on that upward direction, you, for example, may, let's say, enter one lot. It could be the US dollar, the euro against the US dollar, because we're looking at, let's say, a point where NFP report is about to be released. At that specific circle, at that specific time you've entered, NFP comes out, and again, the report may be negative. And because it's negative, the price movement may do this. Again, you are trading in the wrong direction of the market. Yes, this first movement here told you you should be buying and gave you that signal. Whereas if you also look at the fundamentals, you would have seen, right, we've got a massively significant event about to happen. Let's wait for that event and let's see how the price and the market reacts to it before deciding how to trade going forward. So this is why it's important to look at both technical and fundamental analysis. Again, we're not here to give you direct investment advice. And bear in mind, I cannot give you investment advice. The support team cannot give you investment advice, and your account manager cannot give you investment advice. Your trading needs to be done based on you personally, what you personally think is going to happen in the market, and you shouldn't be listening to anybody else. So this is, this has been said for educational purposes in order for you to attempt to spread the risk while you're trading. Instead of just looking at technical, look at both fundamental and technical, and the same vice versa. And that way you can spread the risk of potentially trading in the wrong direction of the market. What is price action? Price action, ladies and gentlemen, is something we've looked at on quite a few occasions, quite a lot of occasions. For example, we've looked at a webinar a couple of weeks ago with regards to understanding price action while using price action with indicators. We've looked at price action webinars specifically as well. Today, we're going to look at price action, but again, using it as part of the Alligator Indicator and today's strategy, where we're looking at different ways of looking at the market. Price action is when you're looking at the price movement and the specific significant pricings in the market. So, for example, it's looking at the price highs when we're looking at the swings. If they're higher, for example, on this occasion, each swing is higher. It could be a head and shoulders situation. So when the price is doing something like this, and we're not having any major significant direction, in which case if you've got a head and shoulders situation looking more bearish movement than actual bullish movement, this is what we're referring to as price action. Now, you can go to YouTube, type in Accentral, and then click on our logo, then click on videos. You can see a lot of webinars there based on price action. This is also something very beneficial to use alongside fundamental and technical analysis and today's strategy. If you're going to use today's strategy in general, or for example, you may wish to use part of today's strategy. You may say to yourself, I'm not going to use it exactly how Mihalis has used it, but I'm going to use certain aspects of it. However, you can go onto YouTube, onto our educational page, and look at more information within regards to price action itself. The US dollar index. This is also something else which can be massively helpful depending on what type of assets you're looking to trade. If you're looking to trade the US dollar index, sorry, a US dollar pair, so it could be the Euro USD, USD Japanese yen, the pound USD, so on and so forth. There's so many different assets. What you can do is also analyze the US dollar index. This is something you can find on MT4, you can find it on different platforms or on the internet itself. The US dollar index is the value of the US dollar against 6 major currencies. So what it's doing, it's giving you a more fairer indication of the price of the US dollar. And there's so many different strategies with regards to how you can use the US dollar as part of the US dollar index as part of your trading. So for example, if you're looking at the Euro USD, and you can see the Euro USD is having a downward trend like this. So it's indicating that the US dollar is increasing against the Euro, let's say by 50 pips. What you can do is you can go to the USDX, which is the US dollar index, and see what type of movement you're seeing on the US dollar in general, instead of just the Euro USD. Because if you're seeing movements like this, in which case you're seeing very bullish and strong movements on the US dollar, you may be comfortable to trade in a direction of the US dollar against the Euro. Whereas if you're looking at this type of movement here, you may say to yourself, right, I really want to be careful about trading the US dollar because the US, even though it's going up against the Euro, the US dollar in general is declining. And even if you do want to trade the Euro, the decline of the Euro, you by all means can look at different assets to pair against the Euro. So for example, you can choose strong assets like the Euro against the US dollar, for example, the Euro against the Australian dollar, the New Zealand dollar, Japanese yen, and so on and so forth. There's lots of different options. But again, this is something you can use as part of your trading. This is our YouTube channel that I spoke about previously. Our YouTube channel has hours and hours worth of educational material. Now we have over 80,000 views on our YouTube channel. It hasn't been running that long. So you can see here how educational and informative these webinars can be. And you can see there's loads of different webinars based on different aspects. So for example, this was a great webinar for trading the Euro. Trading the Euro with the Euro X, NFP Friday for that month, strategies again, we're looking at strategies, indicators, earning seasons, chart analysis. This is using our chart analysis. There's hours and hours worth of trading, educational material. So this is an option if you want to, in general, start to look further in detail within regards to education on the financial trading markets. Let's now start looking at the Alligator Indicator. Now, what I've got here is 3 indicators. I've got my Alligator Indicator. This, by the way, you can find online on our platform, or you can find it also on the MT4 as well. The second indicator that I'm using is the moving average. Now, the type of moving average that I'm using is a 144-day simple moving average. And I'm also using a stochastic oscillator. I put my figures here as well for the Alligator Indicator. By all means, though, you're more than welcome to alter those, and you will have to alter those at some point within regards to depending on the type of volatility you're seeing in the market, the type of trend you're seeing, the assets you're trading, and so on and so forth. You can use it on any assets as long as you're seeing lasting movements in the market. Of course, the longer the movement is lasting, the better. You can use it on 15-minute charts and above. You can switch between 2 charts, which is also beneficial because you're spreading the risk, again, like I previously said. So for example, you can look at a 15-minute chart and then a 4-hour chart. By the way, you can also download the MetaTrader as well platform, in which case you're not only getting the limited amount of time frames, you will also be able to get 6-hour time frames, 8-hour time frames, also 12-hour time frames as well. So you've got that option as well. We've got our take profits at 15 to 20 pips. Again, this is something you can alter, depends on you and your trading. Let's look at buy signals. Now, this may not make much sense, but it definitely will on the next slide, because on the next slide, we'll actually look at this on the actual chart itself. So all three of the alligator trend lines have crossed upwards. This is, by the way, what we need to see, where if we're going to get an upward trend. The price is above the 144-day moving average. The stochastic oscillator has also crossed up. The price must not be in an overbought area. It must not be at a resistance area, and it must not be giving you an indication on price action that we're going to see the opposite type of movement. So this is what we need to see in terms of buy signals. In terms of sell signals, again, this may not make much sense, but it will on the next slide when we look at on the actual chart. When you're looking at sell signals, all three of the alligator trend lines have crossed downwards. The price is below the 144-day MA. The stochastic oscillator has also crossed downwards. The price must not be oversold at a support area or have indications of price action that is going to increase. So this is the chart itself. These three lines that you can see here, the blue, the red, and the green, this is your indicator. This is your alligator indicator. This line here is the 144-day moving average. And also we've got the stochastic oscillator, which is this indicator down here. So how exactly can you use each of these indicators? The 144 is just giving you a very long-term sentiment in terms of if the price is below, you should be looking at overall downward movements. If the price is above, you should be looking at overall upward movements. At the moment, we're far below, so far below we can barely see that indicator actually. So also you need to be slightly careful, especially this area here where we're very far from the sentiment line, that you're not going to become oversold, which we actually do now that I look at the charts, and you can see we've got some movements upwards again. But of course, as you get closer to it, you need to be careful. You're not going to again find resistance. So you can also use that as a trend line. The alligator indicators, you can also act as a trend line. So for example, here you can see how I'm using it as a trend line. We're using each three lines as resistance levels while they're above. So we're looking at this area here as an area of resistance, which it does cross slightly above it, but on average that area did work as a resistance level. Same thing applies here. Same thing happened. Then we actually got a crossover, and now we're going to be looking at this area as for the alligator indicators to be acting as a trend line for the upward motion. By the way, this is a chart from a couple of weeks ago, so this is something you need to update the charts on. This is just examples which I've taken from my MT4 from recent days. This is the euro against the US dollar, it's a 1-hour time frame. What else can we look at in terms of the indicators? The stochastic oscillator, above this dotted line here, we're overbought. Below the dotted line, we're oversold. And also we've got crossovers. So you can see when it crosses over downwards, you've got indications of downward movement. When it's crossed over upwards, like here, we've got indications of upward movement. And what we want to see ideally is we want to see the candlesticks red. At the moment, we're looking at downward trends. Why? Because we're below this moving average. We want to see the candlestick red. This is the first basic, very, very basic type of movement that we want to see. We want to see the green crossing over the red and the blue, and we want to see them look in terms of formations like so. We don't want to see them too close together. We want to see this type of movement in terms of the alligator, like we are seeing here in this region here, where they're trading side by side in terms of the price movement. We want to see the price below. We want to see it cross over downwards. This is why I've got this red line here, because it's at this point we get in the crossover. We want to see this latest crossover on the stochastic oscillators also downwards, which the latest one is. You can use this one or even this one. Both indicators are downwards on the latest crossover, so that's also giving us an indication of downward movement. This is the first couple of indications we have. We can enter at that specific point there. Alternatively, we can enter in this area here. Bear in mind, you have to be able to trade the volatility. So you can see we are getting movement in both directions, and the movement is ranging up and down. But overall, based on this strategy, you're looking at a lovely downward trend. What, again, you need to be careful of is the volatility. We're not just looking at a straight downward trend line like so. You're getting volatility. So the movement is doing this downwards. Now, this means you mustn't be overexposed. If you're trading, let's say, on an account size of 10,000, don't open a trade of 3,000 with a massive high level of leverage, because you're most likely not going to be able to withstand the movement and the volatility. Let's look at a different type of asset. This is Netflix. We're looking at the same similar scenario here, but it's an outward movement. So we are above the 144-day moving average. So this is our MA here. The stochastic oscillator, the latest one, is also upwards. We're not got both lines above in the overbought area just yet, which is good. The price is blue is bearish, which is nice to see as well. It's just crossed the significant level as well if you're looking at indicators as well. Sorry, price action as well. And we've also got the crossover here as well. And you can see, based on that period of time, we're looking at a 1 hour time frame. We've got an increase of $9 on the stock. Now that's quite significant. We've got a nice little increase of $9 within 2 days. So that's a significant type of movement. Bear in mind, we're looking at short to medium term trading here, so that's more than significant. Similar scenario here as well. Very significant movement here, that we've got a strong crossover. Bear in mind, it's a big candlestick here, and it's a strong crossover. We can use price action as well, which is this level here. We can use the second price action level, which is this level here as well. We are above all three of the alligator indicators. We've got a high price on the stochastic oscillator as well, which is good. And we can also use the latest stochastic oscillator crossovers as well. All of us giving us movement in terms of upward direction. Again, this is something that you can use as part of your overall price movement. Let's look at another currency pair. Here we've got the Australian dollar being paired as a countercurrency on the euro currency. So 30-minute time frame, very similar type of movement you would notice here. We are seeing again a significant movement here where it's crossing over above our 144-day moving average. We need to look as well at our price action. So, for example, here we've got a high. Here we've got a higher high because it's a lower high as well. We need to be careful about trading upward movements, even though we're above the moving averages. But then we get a higher high and then a slightly higher as well. So then we start to get more confident about having upward movement. This acted as a support level, and we can see what type of movement we see upwards after that. Something I wanted people to be aware of is ignoring signals. So when signals change, and you can see signals changing in a couple of directions. Here, for example, we have crossovers above the moving average. Because of that crossover, Traders may have traded upwards, but they would have noticed that even though it did go up slightly, it traded in the opposite direction. Because of that, you should have amended your trade, or at least be willing to withstand this type of market movement. And then we get a crossover again in the opposite direction, in the right direction. So be aware to keep looking at the indicators and making sure you're trading in the right direction. And bear in mind, even on this indicator, if you look at the stochastic oscillator, it's giving us the opposite direction in terms of the price movement. So that should have by itself, and we're also at a resistant level here, giving us partly indications that we may see some resistance. And if you do wish as well, as an option, you can also look at different time frames. So for example, here, it's the exact same asset that I'm looking at here, but I'm looking at different time frames. So you can cross-reference between 2 or 3 more time frames. So on the first chart here, I'm looking at the 30-minute time frame. And then I'm checking on the 1-hour time frames to see what type of movement I'm seeing. And here I'm seeing it still above the 144-day moving average. We are attempting to cross above the alligator as well. And also the stochastic oscillator latest movement is upwards. So that brings us to the end of today's webinar. Hopefully you found that today's webinar informative and educational. If you do want to get into touch with me at any point, this is my email address here. If you do want the recording, you will also get the recording shortly after the webinar. In the meantime, ladies and gentlemen, trade safe, trade responsibly, and hopefully you will see you on one of our webinars very, very soon. Thank you.